Alrighty. Hello again. Welcome to
Hello.
Rabbitcha Money.
Hello all.
This is Bharat. I have my colleague Balaji, and we have a special guest Sandeep, uh, who is a high frequency trader by trader standards. Yeah, and he will tell us a little bit about how he traded the Fed event and how what he recommends and how he analyzes the whole thing. And before that, Balaji, let's summarize. You know, how the event panned out and what we discussed before, and let's take a couple of minutes.
Yeah. So welcome, Sandeep.
Thank you, Balaji. Happy to be here.
Yeah. Yeah. So, I mean, a few days back, we know that, we did a preview
Hmm.
before the Fed rate cuts, right?
Hmm.
So we kind of contemplated, what could happen, whether it's going to be 25 or 50, whether how is it going to, really pan out and all that.
Right.
So we just discussing, post that. This is our first video post post that event happened.
Hmm.
So yeah, now Fed went to 50, right?
Right.
So, and we did see an immediate, of course, these things are, some of these measures will take time to, settle down, but we do have seen that immediate effects on the global markets.
Right.
Of course, more so in the emerging markets, right? Because of the low bond yields, they would go and if in the emerging, they would invest. There'll be more investments in the emerging markets. We did see that. We did see see that impact, immediate impact post that. And on the currency markets, and I think let's hear it out from Bharat. How did you see it?
Well, so like we discussed, right, a large part of it was already in the price,
Right.
right? But there is always a part which is not there, right?
Right.
For example, bond yields, right? And what happens to the tech sector, and will the AI investments continue to happen and stuff. So I guess this event has put all those things to rest for some time, all those
Right.
questions and skepticism to rest. So I guess it's going to be largely bullish, but don't I wouldn't expect something to run away because it was largely in the price.
Hmm.
So whether it's
Right.
Bitcoin or cryptos or Forex or S&P or Nasdaq, Dow Jones, emerging markets. In
Right.
emerging markets, right? I mean, we saw that reaction, positive reaction. However, it's not as simple as this interest rate differential. Right? Because
Right.
what matters is the real interest rates.
Yeah.
So emerging
Correct.
markets inflation is also relatively high compared to
Right.
US or UK or rest of Europe,
Right.
right? So it's the
Right.
flow is not always one way. So I think that would be a mistake to assume that. The money will
Right.
come chasing emerging markets.
Right.
So
Yeah. I mean,
that's my short summary.
yep.
Right.
So, just to add my 2 cents, I think like what Bharat was saying, most of it was priced in. Even 50 basis points was not something that was a surprise for the market because it was all baked in, right? And if you look at
Right.
the odds before the Fed cuts, the odds were quite high for the 50 bips rate cut,
Right.
right? And uh, see, it's quite crazy the times that we're living in, right? Because uh, the way gold has rallied, right, and the dollar is still at about 100, the dollar
Right.
index.
Right.
That is unprecedented, right? I've never seen, or at least in my short, career, or even when I look back in history, I've never seen this kind of a thing happen where gold and dollar are holding up at their
Both.
80x,
Right.
right?
Right.
Right. So we are living in unprecedented times. So you can expect the markets to do things that you have not expected to do it do before, right? So
Right.
Yeah.
that's another thing. Second, now we have the inversion of the 10 minus
Eco.
2. Yeah, the 10 minus 2 is also inverted, right?
Yeah.
So the recession fears, or historically, if you see inversions, people say it's the start of a recession, all of that. So those things are also cropping up. There is a lot of uncertainty in the Middle East. There's a lot of uncertainty around the world as well, right?
Right.
So yeah, it's crazy times that we're living in. So Fed rate, I think the Fed rate cut in the larger scheme of things was just one event in 2024, as
Yeah.
expected to the event in 2024.
Right.
Right. Yeah.
I mean, expected for a year almost. So,
Yeah.
Yeah,
So Sandeep, you invest in global markets, right?
I
More
am.
so,
I'm not an investor really at all. So I'm a scalper actually. So my trades last a few minutes
yeah.
to. It's always less than an hour, right? It's from a few
right?
minutes to about 15 to 20 minutes. So that's the
Yeah,
trades. Those are the kind of trades that I take. So I typically
right,
take anywhere between, in a good market condition, maybe 10 to 15 trades a day to sometimes, just 3 to 5 trades a day. So I'm I'm never invested in anything at a macro level, looking at
Hmm.
macro
right.
targets.
Okay, okay,
Right.
interesting.
So,
So,
so
so you
yeah.
look
Go.
at both U.S. as well as the London Stock Exchange very closely.
I do.
So,
I do look at the indices very closely,
mm,
but I mainly actively trade the Nasdaq and the S&P.
right. So how did you go about this? Post this event, or during that, what was your approach?
So, as a scalper, you're not looking at any macro kind of a timeline
Right.
at all, right? So, for us, when typically see, I mainly trade for a prop firm, right?
Mm,
So, when
right,
you're trading for a prop firm, you are not supposed to trade news events,
right,
Right.
right? So,
Are you supposed to stay away or
yeah, we're supposed to stay flat.
be indifferent?
Yes.
mm,
So you
mm,
have no open positions 15 minutes before and 15 minutes after the event, right?
Hmm.
mm,
So
mm,
if you
mm,
look at, for example, we look at Forex Factory, right? The calendar.
mm,
That is our go-to to plan our day, right? If there
Right.
are news events, which we call the red folder and the orange folder events, which is typically
Hmm.
around the USD, that brings in the most volatility, USD and
Right.
GBP typically, right? So we track that and see what time is the news and all of that, and then we kind of plan our trades around the news, right, or away from the news, or just
Hmm.
before or after the news. And since
Okay.
right,
since I'm a scalper, it works for me because I don't have to like carry my trade for an hour or more than an hour, right?
Right.
And my trades never last that long. So
right,
given that, the Fed event for us was actually pretty. All these events are pretty non-events for us scalpers. We look
Brilliant.
for volatility, right? So that's where we make our money. So these
Hmm.
events are good for us because they bring in a lot of volume in the market. And then there's a
Right.
lot of volatility post the event, right? So
Right.
we just look at structure and trade the structure. That's it. We're not calling
Hmm.
direction. We are not calling whether it will go up, go down. We don't worry about what impact the Fed cut would have had. The market should have gone up, so I'm taking a bias. No, we are just trading the current order flow, which is if it's going down, we short it. If it's going up, we take longs. That's it, based on structure. That's how we trade.
Okay. So you trade the ultra short term trend.
Hmm.
right.
Yes, that's
Okay.
correct.
So would you do a breakout and those kind of trades on
Sorry,
events like this?
sorry.
Would you do like a breakout trade and stuff on events
Um,
like this?
so breakout trades typically don't work out very well, uh,
Hmm.
especially in the short term, right? If you have a breakout on the daily, that's fine, right?
Right.
Because
Right.
that's something that you can, even if there's a small pullback, you're still a swing trader. You have a larger stop, and then you can you can
Okay.
withstand that move. But for us scalpers, our stops are like, typically
Tiny.
12 ticks, 15
Hmm.
ticks, max 20
Hmm.
ticks, right?
Right.
So
Right.
breakout trades typically, they break out and then they come back, they take liquidity again and then they go, right? So we
Right.
typically don't trade breakouts. We use breakouts sometimes to play the other trade, which is the short post the breakout, right? So there is
Okay.
a
Right.
breakout, then there is a liquidity level below. So we take the short to the liquidity level, close the trade, and then you can go long again, right? So those are the
Okay.
kind of trades that we take. So essentially, the kind of trading that we do uh, is to look spot for liquidity within the structure. Where are people positioned? Where are people positioned from, and where their stops would be, right? So we look for those liquidity levels, and then once price reaches those liquidity levels, we look for confirmations, right? And then we take the trade from there. We know that once that pool of liquidity is taken, the price is unlikely to come back to that pool again or that structure again, and then we take. So if it's coming down to a liquidity level, it it spikes a liquidity level, takes out some of the stops, generates their orders or institutional orders, and then once we get a confirmation that it wants to go back up, that's when we start getting involved in the market.
Right.
Okay. Sounds good. And so you don't look at the subtext, the analysis of the event and stuff. So it's just the order flow, the price action, the volume, the open interest and stuff.
Absolutely, absolutely. So see these kind of things. So there are two kinds of earlier in my earlier avatar when I used to trade options, we used to take longish views or macro views, right? So
Okay.
it's not that I've not done that. It's just that the type of trading that I do now is very different, and it requires two different mindsets, right? If you're looking
Right,
for
right. Absolutely.
Right.
if you're
Right.
looking for swings, or if you're not a zero DT options trader, that's a different thing. That's as
Yeah.
good as a scalper, right? But if you're, let's say, trading monthly options, then having a macro view uh,
Right. It's useful.
is useful, right? So I have had some success in the past buying not deep out of the money, but slightly out of the money options,
Okay.
either calls or puts based on macro views, right? Because you're
Okay.
paying less, and even if the theta is against you, you're still losing less, right? So
Right,
Right.
right.
yeah, so that kind of used to work for me before, right? For example, the move that we had now,
Mm-hmm.
19964 was a level that we were looking for, right? Post,
Mm-hmm.
so we had a pullback on the Nasdaq about a week back, right?
Right.
And then we came into a certain level, and then from there we were calling 19964, right? By the time FOMC came. So basically, if somebody had bought, actually, I had suggested someone to buy 19964 call options, right? They would
Right.
have made a superb ton of money by
Right.
now.
Right.
Essentially, we had come down to 18900, right? 18900 levels, right?
Correct.
And then 19964 or 19, yeah, that was the level that the options positioning could have been done, right? That's slightly out
Right.
of, I mean, it's not slightly out of the money, it's quite out of the money. But if you look at structure and macro and where
Mm-hmm.
price can reverse from and what it's reaching for, these
Mm-hmm.
are trades that you could do on options. But
Right.
as prop firm traders, we can't carry our trades
Right. Right.
to the
It has to
next
be
day.
intraday and
Yes, yes.
do you have some kind of a time stop for your trades?
You mean active trades?
Yes.
No. So it's basically the trades are structured in a way where the risk and reward is defined. It's
Okay.
always defined.
Right.
1:2, and then
Correct.
that's it. Whether the minute it hits either stop loss or take profit, I'm out of the trade. So doesn't matter how long it takes.
Okay. So it's not like you have to exit in an hour or
No,
nothing like
no.
that. Okay.
It's you have to exit before the market closes. That's it. About 20 minutes before the market closes.
Right.
Okay. I mean, one thing that's always surprised me, whenever I've traded manually, which I don't do enough, whenever I've tried, one of the things is, how do you avoid getting whipsawed?
Mm. Okay, so yeah, so have okay. Here's the thing. So when you're again whipsaw, it depends on what time frame, right? So
Yeah, so let's say on an intraday time frame,
yeah,
yeah, so let's look at the intraday time frame.
right. So you can get whipsawed on a, let's say, 15-minute, right?
Okay,
A lot of times it happens because the market's never going anywhere for, let's say, the 4-hour candle is pretty much a doji, right? It's not gone
right,
up, it's not gone down, it's close open, it's same. It just made a small high and a small low, and then it's just in a range. So the
right,
15-minute time frame, you'll get whipsaw, right?
okay.
So typically, what we also do is to look at each candlestick structure in relation to the previous candle, right? That kind of gives us a context of where the market is, right?
Okay.
So if the previous candle is a large bullish close, for example,
Mm-hmm.
right? And let's say it's reached for a high, a local high, and it's taken out that local high. On the lower time frame, right? I'm talking 1 minute or sub 1 minute time frames, right?
Mm-hmm.
We look for you know, confirmations that it's going to break down and come
Mm-hmm.
back to it's going to be a local pullback on the 15-minute, right? We get a
Okay.
confirmation of that on the 15-second time frame. You construct a trade which is a 1:2 that you can get,
Mm-hmm.
and then you are done with it, right? So even if the 15-minute whipsaws and consolidates, you
Mm-hmm.
can trade zone to zone on sub
Okay.
minute time frame, right?
So
Right.
basically, change the time frame of reference, and
Absolutely.
that can save you a lot of
Absolutely.
jumping up and down.
Absolutely. For example, if you look at just looking at the chart here on the other monitor, right? See, for example, from last Monday till last Wednesday or Thursday, we ranged. The 4-hour kind of was in a complete range on Nasdaq,
Mm-hmm.
right? There was this local range. It was just reaching for the
Right.
high, taking out the high, coming back down, taking out the low. It was a small range expansion, right?
Right.
But the same thing, if you drop down to a 15-minute time frame, you can still get a trade, right? So it really
Mm-hmm.
is relative to the time frame that you're trading. So let's say
Correct. Correct.
you're a trader who's looking at the 4-hour time frame. You're getting whipsawed.
Mm-hmm.
Drop a time frame, you won't get whipsawed.
Mm-hmm.
You can still construct a trade.
Okay. Brilliant. Brilliant. That's mighty useful. Okay. Any other conclusive thoughts to conclude?
In terms of whipsaws,
No. Overall, trading events, trading
okay.
otherwise, trading indicators,
Trading events typically, okay. See, what I have seen in my experience as an intraday trader, right,
Mm-hmm.
is news or events are used to reach out for structure that has a lot of um, how do I put it? Liquidity, let's say.
Okay.
Okay, that's the
Yeah,
right
sure.
word to use. For example, you'll see a bunch of lows that are very
Mm-hmm.
close to each other on the 4-hour. Okay.
Right.
And there's a news that comes in, it comes, takes the low out, and then from there it goes, right? If it's going to the upside. The same thing happens on the other way, right? Where there is a bunch of highs that have been formed very close to each other. That's a liquidity level.
Right. Right.
You will see that price reaches there and then reverses back down to another pool of liquidity. So essentially, what really happens during events is, and that's the reason why we stay out, is that you're not sure where institutional orders are going to get placed, right?
Mm-hmm.
Or institutions are buying or selling at what
Right.
levels, right?
Right.
And news is the best event to kind of move market to a point where, because again, you know, when news comes out, there's a lot of volatility, there's a lot of
True.
slippage, the spreads are crazy. So basically, it's a catalyst for price to move to levels that you would not see in a short period of time, right?
Right.
Right.
So news or events are basically what we call liquidity events. So
Mm.
essentially, you're looking for how people are positioned before the event. Where can be a large pool of liquidity? That's where market will reach to, and then if it reaches there, then that event was used for reaching or taking
Right.
price to that level, so that now we can go from here wherever it is, up or down,
Up or
right?
down. Yeah. So it's
So
basically, a vertical price mover.
exactly, exactly.
Okay. That's a nice way of putting it.
Yeah.
Right. Right.
Okay. Anything else, Balaji?
No, I think it was a wonderful, listening to Sandeep's views. He's just, gave us an insight on scalping. So,
Yep.
which was at least was a new thing for me. But wonderful, Sandeep. I think it was a great insight. Of course, he's not limited to just scalping. He's a, crypto entrepreneur. He's,
Ex crypto
well
entrepreneur.
versed in. Of course, I mean, of course, your knowledge is, very invaluable there, and you have a very wide view on macros too. Although, you
He
say
doesn't
that
use them
you're a
often.
scalper, it's just like, yeah. So yeah, it was a great insight. So wonderfully put, Sandeep. Thanks for that.
Thanks a lot, Sandeep.
Thank you.
So I think we have covered, we just summarized post-Fed reactions from the global markets, and of course, Sandeep's insights on the scalping. I think it was a good session. Thank you. So anything else, Bharat, to add it, or we can conclude this video now?
Yeah. Well, we can conclude. Happy trading, happy investing, happy
Right.
markets.
Yeah.
Yeah.
Question for you guys: where do you think Bitcoin's going?
Good questions. I think, if you look at the historical data, again, past may not be a guarantee of the future. Uh,
Right.
there are very few times Bitcoin has stayed under the mining cost for a long time,
Hmm.
Mm.
right? So I think it's gonna go above the mining cost, number one, pretty soon.
Mm.
Second, I mean, if the recession rumors were to materialize in some fashion or the other, the
Right.
interest rates are headed a lot lower than what even the Fed is thinking,
Hmm.
right? And if that were to happen, right, Bitcoin could hit a quarter million. I
Yeah.
mean, if that were to happen
Absolutely.
again,
Yep.
so this is a function of, quantitative easing coming up again and stuff. But if that were to
Right.
happen, quarter million is not impossible.
Yeah. Absolutely. And one
Yep.
interesting thing that I was seeing is that if you zoom out to like a quarterly chart of Bitcoin and Ethereum, I
Mm-hmm.
mean, you don't even have to zoom out to the quarterly chart. You just zoom out to the monthly chart. You'll see that Ethereum, we didn't break the high, but Bitcoin, we
Right,
broke new all-time highs, right? So
right.
Mm.
that's interesting. So there can be a lot of alpha in Ethereum as
Right.
compared to Bitcoin, right?
Yeah.
Well, but here's the thing. So if you construct a statistical arbitrage, I mean, I've tried this. Yeah, since I'm more of an algorithmic guy.
Right.
If you construct a statistical arbitrage between Bitcoin and Ethereum, right? The relative value doesn't work from
Hmm.
what I've seen
Right.
at any time frame.
Okay.
Mm.
Okay, so what works is, the relative beta,
Hmm.
right? Because there is an inherent trend in this term, Bitcoin versus Ethereum,
Mm.
right? I mean, it could work one way or the other. Like, if the cost optimizations of Ethereum were to get realized at some point, it could start trending in that direction.
Yeah, I
Right?
think
I would wait for a confirmation of this trend of Bitcoin outperforming Ethereum to break
Hmm.
before, going bullish on Ethereum and bearish or neutral on Bitcoin.
Yeah, absolutely. I agree. But
Yeah.
if you look at again going by historical data, so
Right,
you've always had Bitcoin outperform before Ethereum outperforms Bitcoin, right?
right,
So
correct.
so there's
Yeah.
what we used to call the Bitcoin dominance, right?
Right,
So the minute you'll see Bitcoin, we've done this in the past where we have a Bitcoin ATH and
right,
dominance, BTC dominance is at all-time highs, and then post that, money recycles into Ethereum, and then post
Yeah.
Ethereum, all of the other
other odds, yeah,
arts.
Yeah.
absolutely.
So
But I would wait for that to happen.
right.
I'd wait for that to start.
Mm.
I wouldn't,
Position
speculate it
position yourself
beforehand.
now. Got it. Got it. Yeah. And had one more question which I kind of slipped my mind now. Yeah. So what do you now that we have quantitative easing coming, right? I mean, we've started already. So
Right,
there's
Right.
going to be a lot of M2 money supply and a lot of
right,
credit available.
correct,
So even if there is a recession that's incoming, for example,
sure.
I think the market's still going to go up, right?
Well,
Uh,
I mean, here's the
Yeah.
deal, right? So, I mean, this is what I think. If there is a recession coming on the main street,
hmm,
and you're sitting on the mall, so best example is the main street,
right.
right? So, if a recession were to materialize on the main street, okay, so the Fed and other central banks, the BOE, the BOJ, the ECB, they're all going to pump money,
Yes.
right?
Yeah.
And I mean, they're going to pump money to perk up the main street, to
Yep.
perk up the retail activity, to perk up the employment activity, and so on. However, Wall Street is a beneficiary of this, even though the central banks don't care about Wall Street as much because Wall Street may not be underperforming, unlike the Lehman crisis or the pandemic.
Mm.
The Wall Street is still going to benefit.
Yep. Absolutely.
Yeah.
So yeah, that's my view. So whether markets go down in a recession or not go down, they're going to benefit from the quantitative easing
Yeah. Absolutely. I
because
agree.
because
Yeah.
that's the only way the central banks have to pump money as of today. Could it be more efficient? Absolutely, but has it been found yet?
Yeah. True. So because I mean, one of the
Yeah.
things that I was listening to Brent Johnson, I follow him quite a lot. There's a really good podcast of his called Milkshakes Madness,
Right,
Markets Milkshakes and Madness, right? So he's the guy who came up with the dollar milkshake theory, right? So which is a
Mm.
pretty cool theory. It's been holding strong since 2018. So uh, what he said actually piqued my interest, right? Which is this is the first time we've had a rate cut when we are at ATX,
Mm.
right? Which is crazy, don't you think?
yeah, yeah,
Yeah, because rate cuts
Yeah.
have always happened during, events of great uncertainty. Yes,
right,
there is
Right.
great uncertainty, but even the markets would have tanked at that time, right? So, and then we have the rate cuts and all of that coming in to save the day. But this time,
right.
it's a very different scenario. So
No,
that's why
I
all
guess
these.
that's also market's way of anticipating this. Right? See, in the last 1 year, the market has run up anticipating this,
True, true. Yeah, but then even the
right?
last 1 year, I mean, what really surprises me is the last 1 year the liquidity wasn't really available to a point where you could have a run up like this. Yes, there was the Fed window, then there is there
No,
was
it
a
was it's no, it's just the expectation, right?
yeah,
I
but
mean, it could be running up on light volumes, right?
yeah, absolutely, absolutely, agree with you, completely agree with you. So that's interesting to see, right? This time around,
Yep,
it's something that is quite unprecedented, right? And there is no historical, datum to kind of measure what's happening this time around, right? So that's interesting. That's very
Yeah,
interesting.
I mean, every black swan is different. This is, I would say, some kind of a black swan, with impact, with
To the
immediate
upside.
impact, not as much.
Actually, it's the
Right.
opposite. I mean, it's a black swan to the upside. Who knows?
Yeah,
Yeah, yeah, actually,
it
that's
is
also a black swan. I mean,
Yeah.
black swan to the upside, not yeah, absolutely.
Yeah. So good. So and yeah, one more. You think the yen carry trade is still on after the liquidity event on
why
after?
not? I mean,
Yeah.
that's a blip, and I mean, even freelance has some cost, right?
Yeah.
And
Right.
we just paid up that cost, and uh, the freelance continues.
Absolutely.
I mean, no,
Because
no,
yeah,
no, no matter how mutually contradictory and stupid it sounds.
true. Because I don't think BOJ is gonna.
No,
I think that
and if you look at the structure of the Japanese economy, right, it's fundamentally different from the rest of the West,
absolutely.
right? I mean, the inflation, the interest rates, the equity markets, the bond market, everything is very different.
Yep.
So
Yeah.
until that divergence is gone, the carry trade won't be gone.
True. Yeah. So it was a good liquidity event to get repositioned, I guess, into the carry trade.
Right.
Yeah, at a better
Yeah.
level.
Yeah. True. All right. Nice.
All right,
It was
guys.
a good
Thanks a lot.
conversation.
Yeah. Thanks a lot.
No problem.
Yeah. Please subscribe, share,
Yeah.
comment on our channel. Thanks a lot, Sandeep. Thanks a lot, Bharat.
Thank you for having
And
me.
thanks
Thank
a lot,
you.
Suraj, who is our main producer. So the back end. Yeah. Thank you.
Thank you.
Wonderful.
Thank you all.
Yeah.
Yeah.
Good night.
Good night.
Bye bye.
Bye.
Bye.